there's a particular kind of silence that follows broken promises. Not the silence of ending, but the silence of waiting the uncomfortable gap between what was supposed to happen and what actually is. If you're reading technology headlines in early 2026, you know this silence. It sounds like AI underdelivers enterprise adoption, slower than expected. Productivity gains remain elusive. But here's what makes this moment strange. We've been here before, many times, and each time, we act surprised. The Romans had a word for this feeling, though they weren't talking about technology. They called it the gap between expectation and reality. Between our projections of how the world should work and the stubborn insistence of things as they are, 2,000 years later, economists would give it a different name, the J-curve. The shape that describes how things often get worse before they get better, how investment precedes return, how disruption creates chaos before it creates value. And in 2026, we're discovering that artificial intelligence isn't exempt from this ancient pattern. This isn't a story about AI failing. It's a story about how we consistently misunderstand transformation itself, about why every generation convinces itself that this time is different. This technology is faster, this revolution will skip the messy middle parts. And it's a story about what the Stoic philosophers understood about disappointment that we've forgotten. Knowledge that might be the most valuable technology we could deploy right now. Let's start with the promise. In 2023, something shifted in the collective technological imagination. ChatGPT had launched months earlier, and suddenly artificial intelligence wasn't a future concept or a narrow tool-it was conversational, accessible, almost magical. The predictions came fast. AI would revolutionize education within a year. Legal work would be transformed by 2024. Programming would become obsolete. Customer service would be fully automated. Every industry would be disrupted. Every job would be affected. Every business would be AA-enabled by 2025. The venture capital flowed accordingly. In 2023 and 2024, hundreds of billions poured into AI companies, AI infrastructure, AI consulting. Executives who couldn't spell neural networks 6 months prior suddenly had AI strategies. Business schools created AI leadership programs. LinkedIn filled with AI experts who'd been blockchain experts the year before and metaverse consultants before that. The story was simple and intoxicating. We stood at the threshold of the most rapid transformation in human history. Exponential change, discontinuous innovation, the future arriving faster than we could imagine. Except now, in early 2026, something else is happening. The transformation is slower than promised. The results are mixed. The productivity gains that were supposed to be obvious remain stubbornly unclear. Yes, AI is being used. Yes, some efficiencies exist. But the revolutionary wholesale transformation, the complete reimagining of how work happens, that's not manifesting on the timeline everyone projected. And so we've entered what technology analysts call the trough of disillusionment, the valley in the Gartner hype cycle, where reality fails to match expectations and disappointment sets in. But here's where the story gets interesting. Because this pattern, this specific shape of enthusiasm followed by disappointment, isn't new to AI or even to digital technology, it's one of the most consistent patterns in the entire history of innovation. Economists call it the J-curve, because when you graph it, the line drops below the starting point before eventually rising above it. Initial investment and disruption create short-term productivity losses and confusion. Only later, sometimes much later, do the gains materialize. The printing press, the steam engine, electricity, computers, the internet, every genuinely transformative technology followed this pattern. And every time, people were shocked by the gap between deployment and payoff. Consider the printing press. Johannes Gutenberg developed movable type printing in the 1440s. This was clearly revolutionary technology. The ability to reproduce texts mechanically rather than by hand would obviously transform everything: education, religion, politics, knowledge itself, and it did eventually. But not on anyone's expected timeline. For decades after Gutenberg, most books were still copied by hand. The first printed books mimicked handwriting so closely that readers couldn't tell the difference. Monasteries kept their scriptoriums running. The Catholic Church, which would eventually be disrupted by printed Protestant Bibles, was initially printing's biggest customer. It took roughly 50 years before printing began to have its revolutionary social effects. 50 years before Luther's theses could spread across Europe in weeks rather than never. 50 years before enough people could read that mass literacy became imaginable. The technology arrived in the 1440s. The transformation happened around the 1500s. In between was a long, confusing period where everyone could see the potential, but few could point to the revolution actually occurring. Or take electricity. Thomas Edison's Pearl Street Station began providing electric power to Manhattan in 1882. Here was the future: clean, efficient, revolutionary energy that would transform manufacturing, extend working hours, change domestic life. The potential was obvious to everyone. And yet, for decades, factories kept using steam power. In 1900, 18 years after Edison's demonstration, only 5% of American mechanical drive power came from electricity. Most factories had electric lights. Sure, that was an easy substitution. But reorganizing production around electric power, that required rethinking everything: factory layouts, work processes, power distribution. It wasn't until the 1920s, 40 years after Edison, that electricity really transformed industrial production. And even then, there was what economic historians call the productivity paradox. Through the 1920s and even into the 1930s, economists struggled to find clear evidence that electricity was making the economy more productive. The technology was everywhere. The investment was enormous. But the statistical payoff remained elusive. It was only in retrospect, looking backward from the 1940s and 1950s, that economists could clearly see the transformation. In the moment, during the deployment phase, it mostly felt expensive and confusing. The pattern repeats with computers. The first commercial computers arrived in the 1950s. By the 1970s, they were becoming common in business. By the 1980s, personal computers were on millions of desks. And yet, in 1987, economist Robert Solow famously observed that you could see the computer age everywhere except in the productivity statistics. This became known as the Solow paradox. All this investment, all this obvious technological capability, and no clear evidence that it was making the economy more productive. The gains would eventually show up massively, but it took until the mid-1990s, 40 years after the first commercial computers, before the productivity statistics clearly reflected the transformation. Why does this pattern repeat? Why do we consistently overestimate short-term change and underestimate long-term transformation? The answer sits at the intersection of technology, psychology, and institutional behavior. And understanding it requires going back to those Roman philosophers who first systematically thought about expectations and disappointment. The Stoics were obsessed with a particular problem. Why do we suffer when reality differs from our expectations? Their answer was subtle. It wasn't that we shouldn't have hopes or plans. It was that we fundamentally misunderstand what we control. We control our efforts, our responses, our interpretations. We don't control outcomes, timing, or how quickly the world changes shape. The Stoic project was about aligning expectations with what's actually in our power, distinguishing between the story we tell about how things should unfold and the complex reality of how things actually do. Marcus Aurelius, writing in his private journals while commanding the Roman Empire, kept returning to this theme. He would remind himself that his expectations were not reality itself, but interpretations, projections, stories about the future. And when those stories didn't match what actually occurred, the gap created suffering. Not because reality was failing, but because his expectations were disconnected from the intricate web of causation that actually determines how things unfold. This maps remarkably well onto the J-curve trap. When we invest in new technology, we're not just deploying tools. We're deploying expectations. We're telling ourselves stories about what will happen, how quickly, with what effects. And because we're human, we tell linear stories. We imagine that if the technology works, and we install it, then the transformation follows naturally and quickly. We skip over the messy middle, the integration phase, the learning curve, the institutional resistance, the need to redesign workflows and retrain humans and figure out what the technology is actually good for versus what we hoped it would be good for. The Romans actually experienced this with aqueduct technology. When Rome began building large-scale aqueducts in the 4th century BCE, the engineering was impressive and the potential was obvious. Reliable water supply would transform urban life, enable larger populations, improve public health. And it did, eventually. But for decades, People kept using wells and local springs. The aqueducts were expensive to maintain. Not every neighborhood connected to them immediately. The full transformation of Roman urban life around aqueduct water took generations, not years. People living through the deployment phase couldn't see the revolution. They just saw expensive infrastructure with unclear payoff. Here's what makes the AI curve particularly interesting in 2026. We have more historical examples than ever before. More economic research on technology adoption, more frameworks like the Gartner hype cycle that explicitly predict the pattern. And yet, we're still surprised. We still act shocked when the transformation doesn't happen on the timeline the initial enthusiasm suggested. Why? Part of it is incentive structure. The people building AI companies need to raise capital. Venture capitalists need to deploy funds and show returns. Consultants need to sell services. Media needs compelling stories. Everyone in the ecosystem has an incentive to emphasize the revolutionary potential and downplay the messy integration phase. This isn't conspiracy or deception, just that the story of rapid transformation is more compelling, more fundable, more shareable than the story of slow, grinding institutional change. But there's something deeper happening psychologically. We have what behavioral economists call exponential growth bias. When we see something improving rapidly and AI capabilities have improved rapidly, we intuitively project that rate of improvement forward. We imagine exponential curves continuing indefinitely. But technology adoption isn't the same as technology capability. Just because an AI model gets twice as good doesn't mean organizations integrate it twice as fast. In fact, organizational change is stubbornly linear, sometimes logarithmic. It's limited by training time, by institutional caution, by the need to redesign processes, by regulatory uncertainty, by the simple fact that humans take time to learn and adapt. There's also what psychologists call the planning fallacy, our tendency to underestimate how long things will take and how much can go wrong. When you're excited about technology, you imagine the straightforward path: develop the tool, deploy it, gain the benefits. You don't imagine all the small frictions, the integration challenges, the unexpected use cases, the ways the tool doesn't quite fit the workflow, the human resistance, the need for complementary innovations. Each friction seems minor, but they compound. They turn the imagined timeline of months into the actual timeline of years. The Stoics had a practice they called premeditatio meliorantha, premeditation of evils. It sounds pessimistic, but it wasn't. It was about imagining what could go wrong, not to induce anxiety, but to prepare emotionally and practically. If you've already imagined the delays, the setbacks, the gap between promise and reality, you're not devastated when they occur. You've already integrated them into your expectations. You can respond rather than react. This is exactly what we fail to do with technology adoption. We engage in what we might call premeditatio optimorum, the premeditation of optimal scenarios. We imagine everything going right, every efficiency gain materializing, every friction being minimal. And then when reality is messier, we experience it as failure rather than as the normal, predictable pattern of transformation. Let's get specific about what's happening with AI in 2026. The disappointment has several layers. First, there's the productivity measurement problem. Companies have invested heavily in AI tools and infrastructure. Employees are using ChatGPT and similar tools. But when organizations try to measure the productivity gains, the results are ambiguous. Some individuals report being faster at certain tasks, but overall, team productivity, organizational output. The numbers don't show the dramatic improvements that would justify the investment. This mirrors exactly what happened with computers in the 1980s. Why the measurement problem? Because productivity gains from general-purpose technologies don't show up until you redesign work around them. When you first give someone a computer, they use it like a fancy typewriter. The real productivity gains come when you stop thinking about typing documents and start thinking about spreadsheet modeling, database management, collaborative editing. But that requires learning new skills, redesigning workflows, even reorganizing how teams are structured. The same thing is happening with AI. Early adopters are using it to do existing tasks a bit faster. Real transformation requires reimagining what the tasks should be. Second, there's the application gap. AI models are impressively capable at certain things, but the gap between a capable model and a reliable application is larger than expected. AI is probabilistic. It produces different outputs for similar inputs. It makes mistakes that are hard to predict. It requires significant human oversight. Building truly automated, reliable systems on top of probabilistic foundations is harder than the initial demo suggested. Many companies built AI features quickly, then spent months trying to make them reliable enough for actual deployment. Third, there's the talent and knowledge bottleneck. Even though AI tools are more accessible than previous technologies, using them effectively requires judgment, experimentation, understanding of their limitations. Organizations don't have enough people with this knowledge. Training takes time. Meanwhile, there's a gap where some employees enthusiastically use AI while others are skeptical or uncertain, creating uneven adoption within organizations. This is exactly what happened with computers for years. Some workers embraced them while others resisted, creating productivity variance rather than uniform improvement. Fourth, there's regulatory and institutional friction. Governments and large institutions are cautious, appropriately, about deploying AI in sensitive domains like healthcare, education, legal work, financial services. They're developing guidelines, running pilots, moving slowly. This is rational risk management, but it slows deployment. And it means that many of the most promising applications, the ones that would most clearly transform productivity, are stuck in the institutional approval process. None of this means AI isn't transformative. It just means transformation follows the historical pattern rather than the enthusiastic projection. And this is where the Stoic framework becomes genuinely useful. Because the Stoics weren't arguing for pessimism or for abandoning ambitious projects. They were arguing for what we might call radical acceptance of process. Accept that things take the time they take. Accept that resistance and friction are part of change, not obstacles to it. Accept that the gap between deployment and transformation is where the actual work happens. Epictetus, one of the most practical Stoic teachers, had a useful framework. He divided everything into two categories: things within our control and things outside it. Our effort, our learning, our response to setbacks, these are within our control. The timeline of transformation, the adoption rate across society, whether our investment pays off in 2 years or 10, these are largely outside our control. Suffering comes from treating the latter category as if it belongs to the former. We imagine that, if we just try harder, hype more, invest more, we can control the timeline. But transformation has its own pace, determined by millions of individual and institutional decisions, by cultural absorption, by the time it takes for new possibilities to become imaginable. This doesn't mean passivity. The Stoics were intensely action-oriented. Marcus Aurelius ran an empire. Seneca advised emperors. Epictetus taught generations of students. But their action was rooted in accepting what they couldn't control and focusing energy on what they could. Applied to technology adoption, this means build excellent tools. Yes, make them accessible. But accept that societal integration follows its own timeline. The work is to keep building, keep improving, keep learning from deployment, not to perform surprise and disappointment when transformation isn't instantaneous. There's a particular phrase from Marcus Aurelius that's relevant here. The impediment to action advances action. What stands in the way becomes the way. He was pointing to how obstacles, friction, and setbacks aren't external to progress. They are the terrain on which progress happens. If AI adoption were frictionless, if transformation were instantaneous, there would be nothing to learn, no adaptation required, no skill development. The difficulty is where the capability gets built. This maps onto something economic historians have observed about the J-curve. The trough, the period of disappointment and slow progress, isn't wasted time. It's when crucial learning happens. It's when organizations figure out what AI is actually good for versus what they imagined. When the hype tourists leave and the serious builders remain, when pricing corrects and business models get tested, when regulatory frameworks get developed and best practices emerge, the trough is productive, just not in the way that shows up in immediate returns. Think about the internet. The dot-com bubble peaked in early 2000, then crashed spectacularly. Trillions in market value vanished. The period from 2000 to 2003 is often called the dot-com winter, a trough of disillusionment, where it seemed the internet had been massively overhyped. And in terms of immediate business models, it had been but. Those years were when crucial infrastructure got built. Broadband expanded, browsers improved, people learned what actually worked online versus what sounded good in a pitch deck. When the internet economy roared back in the mid-2000s with Google, Amazon, and social media, it was built on lessons learned in the trough. The same thing happened after the AI winter of the 1980s. Early AI had been overhyped. Expert systems were supposed to revolutionize everything, but turned out to be brittle and limited. Funding dried up. The field retreated to academic research. But those lean years were when fundamental advances happened in neural networks. In machine learning theory, in understanding what AI was actually good at, when AA roared back in the 2010s with deep learning, it was built on foundations laid during the winter. So if 2026 is shaping up as a trough of disillusionment for AI, the Stoic response isn't disappointment or cynicism, it's recognition. This is the pattern. This is where the work happens. The question isn't whether we're disappointed, but whether we're learning, adapting, building on firmer foundations. There's another Stoic concept that's useful here, amor fati, love of fate. It sounds mystical, but in practice, it's quite pragmatic. It means treating what actually happens, opposed to what you wished would happen, as the material you have to work with. Not passive acceptance, but active engagement with reality as it is. If AI transformation is slower than expected, amor fati means, okay, that's the reality. What can we build with that reality? What can we learn from it? How does it clarify what's actually valuable versus what was hype? This is exactly what happened with electricity. When it became clear that simply installing electric motors in factories wasn't transformative, engineers had to rethink everything. They realized the value wasn't in swapping power sources, but in reorganizing production. They developed assembly lines, continuous flow manufacturing, and distributed power systems. The delay forced deeper innovation. The same thing is happening now with AI. The gap between capability and application is forcing developers to confront questions they initially bypassed. How do we make AI reliable? How do we integrate it into existing workflows? What problems does it actually solve versus what problems we wished it solved? Let's talk about what the history suggests happens next. Based on previous technology, J-curves, we can make some educated projections about the AI trajectory from here. First, expect divergence. Some organizations and sectors will figure out productive AI use, while others lag. This creates a performance gap that becomes self-reinforcing. The successful adopters pull ahead, creating competitive pressure that eventually forces broader adoption. But this is a years-long process, not months. We're probably in 2026, seeing the beginning of this divergence, not the end result. Second, expect the use cases to shift. The initial applications, the ones that got hyped often, aren't where the real value ends up being. With electricity, people initially thought the value was lighting. The real transformation was in motor power. With the internet, people initially thought the value was in replicating physical stores online. The real transformation was in new categories like social networking and cloud services that couldn't have existed before. With AI, we're probably still discovering what it's actually best at. The applications that seem marginal now might be the transformative ones in 5 years. Third, expect consolidation and maturation. The number of AI startups will likely decline. The infrastructure will standardize. The technology will become less exciting and more boring, which is actually when it becomes most useful. Boring means reliable, predictable, integrated into normal operations. The most transformative technologies eventually become invisible. You don't think about electricity when you flip a light switch. That invisibility is the sign of successful integration. Fourth, expect complementary innovations to emerge. Big technology shifts require whole ecosystems of supporting changes. Electricity required electrical engineering education, power grid infrastructure, appliance manufacturing. Computers required software industries, IT departments, and new business processes. AI will require new job categories, new educational curricula, new regulatory frameworks, new business models. These complementary innovations take time to develop, but they're what actually enabled the transformation to scale. The Stoics would add one more element: expect the unexpected. One of Marcus Aurelius's core practices was reminding himself that things rarely unfold as planned. Not because planning is worthless, but because the world is complex and causation is intricate. The actual path of AI transformation will likely surprise us not by being faster or slower than expected, but by going in directions we didn't anticipate. The Stoic response is to stay flexible, to treat plans as hypotheses rather than predictions, to adapt to what actually emerges rather than insisting reality conform to our projections. Here's what makes 2026 particularly interesting. We're watching this happen with more awareness than ever before. Previous technology troughs occurred with less historical consciousness. People living through the electricity productivity paradox didn't have frameworks like the J-curve or the Gartner hype cycle. They just experienced confusion. We have the conceptual tools to recognize the pattern, which means we could, in theory, respond more skillfully. We could treat the trough as expected and productive rather than as surprising and frustrating. But knowing the pattern intellectually and responding to it emotionally are different things. This is where Stoic practices become concrete and useful. The Stoics developed specific techniques for managing the gap between expectation and reality. One was the view from above, imagining your situation from a broader perspective across longer timescales. From the perspective of 2026, AI disappointment feels significant. From the perspective of 2036, it might look like a predictable and brief pause in a longer transformation. The view from above doesn't eliminate present challenges, but it contextualizes them, makes them less overwhelming. Another Stoic technique was voluntary discomfort, discomfortably experiencing mild versions of difficulties to build resilience. Applied to technology expectations, this might mean deliberately imagining worse scenarios. What if AI transformation takes 20 years instead of 5? What if some promised applications never materialize? What if the investment doesn't pay off as expected? Not to induce pessimism, but to emotionally prepare for realistic possibilities. If you've already imagined these scenarios, you can respond to them calmly rather than reactively. A third technique was negative visualization, consciously appreciating what you have by imagining its loss. For AI, this might mean recognizing that even if transformation is slower than expected, we have remarkably capable tools available right now. The gap between current AI and previous technology is already enormous. The disappointment comes from comparing reality to exaggerated projections, not from comparing it to the actual baseline. Negative visualization recalibrates appreciation. But perhaps the most important Stoic practice for navigating technology troughs is dichotomy of control, the constant practice of distinguishing what you control from what you don't. You control your learning, your experimentation, your response to setbacks, your decision to keep building. You don't control market timing, societal adoption rates, whether your particular bet pays off. Anxiety comes from mixing these categories, from feeling responsible for things outside your control or passive about things within it. Applied concretely, if you're working with AI in 2026, you control whether you learn its actual capabilities and limitations. You control whether you experiment thoughtfully or just follow hype. You control whether you build things that solve real problems or just demo well. You don't control whether AI stocks go up, whether your company's AI investment pays off this quarter, whether society transforms on your preferred timeline. The Stoic move is to let go of the latter and focus intensely on the former. This might sound like corporate self-help, but there's something genuinely radical here. Most technology discourse focuses on prediction and control forecasting which technologies will win, which companies will dominate, which investments will pay off. The Stoic approach fundamentally rejects this frame. It says, transformation is too complex to predict accurately, and your well-being shouldn't depend on your predictive accuracy. What you can control is your relationship to the transformation, how you learn, how you adapt, how you contribute, how you respond to setbacks. That's enough. There's a historical parallel worth noting. The Stoic philosophy emerged during a period of enormous uncertainty in the Roman world. The Republic was collapsing into empire. Political norms were dissolving. Violence was common. People had very little control over their fates. You could be elevated to power or executed based on factors completely outside your control. And in this environment, the Stoics developed a philosophy of focusing on the only thing they could control: their character, their responses, their internal state, not as resignation, but as the foundation for effective action in an unpredictable world. We're not facing Roman-level chaos, but there's a parallel in how technology creates similar uncertainty. You can't predict which AI companies will succeed, which applications will transform industries. Whether your skills will be obsolete in 5 years, the predictive approach generates anxiety because prediction is impossible. The Stoic approach suggests, instead of trying to predict and control the uncontrollable, focus on what you actually can control: your learning, your adaptability, your contribution, your character. Build from there. This connects to something economic historians have observed about successful navigation of technology: J-curves. The organizations and individuals who thrive aren't the ones who predicted the timeline correctly. They're the ones who stayed engaged through the trough, who kept learning and adapting when others got discouraged, who treated setbacks as information rather than failure. This is almost exactly the Stoic formula. Accept the process, focus on what you control, persist through difficulty. Let's bring this to ground level. If you're working with AI in 2026, feeling the gap between what was promised and what's being delivered, what does the Stoic approach suggest practically? First, recalibrate expectations. Not to pessimism, but to process. Transformation takes the time it takes. Your frustration with the timeline doesn't accelerate it. Second, focus on learning actual capabilities versus hyped potential. What can the tools actually do reliably? What problems do they genuinely solve? Build from there. Third, expect friction and use it as feedback. Every difficulty in deployment is information about what needs to improve. Fourth, measure your progress against your own learning and contribution, not against external timelines or other people's promises. This isn't resignation to mediocrity. The Stoics were ambitious and effective. Marcus Aurelius commanded legions. Seneca was one of the wealthiest men in Rome. Epictetus influenced generations, but their ambition was rooted in accepting what they couldn't control and maximizing what they could. For AI development and adoption, this might mean be ambitious about building excellent tools and finding genuine applications. Accept that societal transformation has its own timeline. Don't confuse the two. There's one more layer to explore. What the Stoics understood about time itself, we tend to think of time as a neutral container in which events happen faster or slower. But the Stoics suggested something more interesting, that our relationship to time is psychological, and that psychological relationship shapes what's possible. When we're impatient, we compress timelines in our imagination and then feel frustrated when reality doesn't comply. When we're anxious about the future, we project current difficulties forward indefinitely. Both distort clear thinking. Marcus Aurelius kept reminding himself to stay present, not because the future doesn't matter, but because effective action happens now with current information and capabilities. Applied to technology transformation, this means don't spend 2026 frustrated that the transformation hasn't yet happened, or anxious that it never will. Spend 2026 doing the work that 2026 requires: learning, building, adapting. The future takes care of itself through accumulated present action. This connects to something subtle about J-curves. We graph them as if time is the independent variable and progress is the dependent variable. But actually, the work itself creates the timeline. Progress happens when enough people have learned enough, built enough, adapted enough. You can't shortcut that by demanding it happen faster. The Stoic insight is that accepting this doesn't slow progress, it might accelerate it. Because you stop wasting energy on timeline anxiety and focus on doing the work. So what might a Stoic approach to AA in 2026 actually look like in practice? For investors, it might mean accepting that you can't time the transformation accurately, but you can invest in fundamentals companies solving real problems. Technologies with genuine capabilities, infrastructure that will be needed regardless. For companies, it might mean treating AI as a long-term capability to build rather than a short-term productivity hack. Invest in learning, experimentation, and thoughtful integration rather than rushing to deploy for deployment's sake. For individuals, it might mean learning AI capabilities deeply rather than superficially. Finding genuine applications rather than chasing hype, being patient with the learning curve. And for society, it might mean accepting that transformation is messy and uneven, that some sectors will adopt faster than others, that the benefits will be unevenly distributed initially, that regulation and social adaptation take time. Not as an excuse for inaction, but as a realistic foundation for effective action. The alternative, expecting frictionless, rapid, uniform transformation, just generates disappointment and reactive policy. We're approaching the end of this exploration, and it's worth stepping back to see the full pattern. Every major technology, printing, electricity, computers, the internet, followed the J-curve. Enthusiasm and investment, then disappointing gaps between promise and delivery, then eventually genuine transformation that exceeded the initial hype but took longer than expected. AI is following this pattern. The only unusual thing about the current moment is that we have so many historical examples and so much conceptual understanding of the pattern. Yet we're still surprised when it happens. The Stoics would say this is because we haven't done the psychological work that makes the intellectual understanding effective. Knowing the J-curve intellectually doesn't change our emotional relationship to time and expectation. That requires practice, the kind of daily reminder Marcus Aurelius gave himself that things take time, that we don't control timelines, that frustration with the pace doesn't accelerate progress, that the work is to stay engaged and focused on what we can actually control. Here's the genuinely optimistic version of this story. If 2026 is the trough of disillusionment for AI, we're exactly where we need to be for real transformation to begin. The hype has been tested against reality. The easy wins have been harvested. The hard problems are becoming clear. The people who were here for quick returns are leaving. The people committed to building are staying. This is when the actual work happens. This is when technologies stop being stories about the future and start becoming infrastructure in the present. And if the Stoics were right, that the obstacle is the way, then the very things that feel like disappointments in 2026, low adoption, unclear productivity gains, the gap between capability and application, these are the terrain on which genuine transformation will be built. Not in spite of the difficulty, but through it. The friction is where we learn what AI actually is, what it's actually good for, how it actually integrates into human work and society. Without the friction, we'd just be deploying hype. With it, we might actually build something real. The final Stoic move is this. Transformation isn't something that happens to us. It's something we participate in, through our choices, our learning, our persistence, through difficulty. 2026 won't be a year of disappointment if we're clear about what we're trying to do. It will be a year of productive friction, of learning what works versus what doesn't, of building foundations for actual transformation rather than performing transformation for appearances. Marcus Aurelius, writing almost 2,000 years ago, put it simply, do not disturb yourself by thinking of the whole of your life. Do not let your thoughts at once embrace all the various troubles which you may expect to befall you. But on every occasion, ask yourself, what is there in this which is intolerable and past bearing? You will be ashamed to confess. Then remind yourself that neither the future nor the past pains you, but only the present. The work is now, the tools are here, the capability exists. The question isn't whether transformation will happen on the timeline we initially imagined. The question is whether we'll do today's work today, and let the future take care of itself through accumulated present action. That's the Stoic lesson. That's what the J-curve teaches. And that's what makes 2026 not a year of disappointment, but a year of beginning. Not the end of the AI story, but the end of the beginning. The moment when we stop talking about revolution and start building it. One difficult present moment at a time.